let's wish them well. For those of you that are joining us for the first time, welcome to the Tharawat space. My name is Farida Al-Agami. I'm the General Manager of the Tharawat Family Business Forum. We are a private sector network of family enterprises. So we work with second generation and older family businesses on sustainability, innovation, and growth. And part of our programming is this public series of talks where we feel we want to address topics of general interest to different types of people, to entrepreneurs, to family business owners, but also to the general public, because we feel very often we have conversations within Tharawat that really are too interesting not to share with a wider audience. Before starting off, it's a great pleasure to introduce our three very illustrious speakers tonight. On my left, Matt Suiche. They actually sit, see, this is how we are organized. They literally sit underneath each other's names. So I think I'd just like to give kudos to our organizing team for managing this. Matt Suiche, he's the founder of Comae Technologies and the cybersecurity expert. Hubertus Thonhauser, who's an angel investor and the managing partner at Enabling Future. And Ahmed Al-Balaghi, blockchain researcher at Viewfin, amongst many other things. We got a very long bio from you as well. Now, before we kick off and looking at the audience, actually, I'm very happy to see a very diverse audience here tonight. And I wanted to start off with one question that actually prompted tonight's session. We had a Tharawat event at some point a couple of weeks back, and a third-generation business owner from a trading company asked me this question: Farida, does my business need a blockchain? Now, I was very flattered that he asked me that question, because clearly I look like a person who could have the answer. It's probably the glasses. But unfortunately, I did not have the answer for him, and I did not know how to kind of approach this in a different way than to tell him, you know what, let me ask some people and get back to you on this. So this is how we kind of started on this conversation, and we felt that probably there's a lot of people outside of the tech sector who have this type of question. So what we want to do tonight is, probably we won't find an answer to this question right away, but we might be able to kind of enlighten the audience a little bit on how we can approach potentially answering this question in the future. I'd like to make this very interactive, considering we know many of you in here. Please feel free to ask questions, raise your hands. We want to keep it timely, but we're also happy to have a conversation. I'm very confident that the gentlemen can handle pretty much any question you throw at them, so related to blockchain, not about life in general. What I'd like to do to start off with is to maybe give you an opportunity to just tell us a little bit about yourself, what your current activity is, and also what relates you to the topic of blockchain. Maybe let's start with Ahmed.
Hello everyone, my name is Ahmed Al-Balaghi. I'm a blockchain researcher at Viewfin. Viewfin is a Chinese company which focuses on public blockchain, mining, and crypto exchanges. And I'm here based in the region, so sort of my why regarding Simon Sinek. I'd like to start with that. So it's really to add value to the blockchain ecosystem at large, and doing that through doing research for the company, helping the company expand the operations in the Middle East. So I'm alone in the company here, but I'm also a community partner of FinTech Connector, which is an online community for FinTech professionals, and I also do a few workshops on blockchain as well in the region. Yeah, that's pretty much.
Okay, Hubertus?
Yeah, hi everyone. My name is Hubertus. I'm from Austria, Vienna. I'm living in Dubai since 4 years. I'm involved in crypto since, I think, 1999, when there was the first movements coming up. But I did my first Bitcoin purchase 10 years later, 11 years later to be honest. And the current activities that I'm doing is actually nothing to do with crypto in the first place, it's a tech venture capital firm called Enabling Future. We have invested in fintech, e-commerce, and agri-tech companies around the world. The company is backed by two family offices here in Dubai. One is the family of my family, basically. The other is the family of my partner from Pakistan. We're both based here. And we started to, have a look at crypto together in a much later stage, so way after the first Bitcoin was launched. Now we are also involved in the first cryptocurrency hedge fund in Switzerland called Base 58. It's basically a hedge fund like from normal financial markets involved in focus on cryptocurrencies.
Thank you very much. Matt.
Hi everyone. So I've been in Dubai for 2 years. My name is Matt. I'm a long-time supporter of the Tharawat organization. And so my main background is cybersecurity. And last year I started to look more about what was happening around like the blockchain buzzword. Ended up writing some security auditing tool for Ethereum smart contracts. And since then, after highlighting like the potential like design flaws in smart contracts, I ended up like commenting a lot about like all the acts happening for ICOs or crypto exchanges. I ended up commenting so much that Bloomberg actually called my company a blockchain security company, which is not technically. We help like companies with incident response and to do investigations when they are breached. And blockchain security became like a side project. Now we'll see like this year if it's going to be an actual focus or not. As a startup, who's mainly focusing on cybersecurity, so some of our clients can be like financial organizations. So like their prime interest is definitely not to see like their money being stolen. And that's one of the risks that we have seen last year. We evolved those technologies, even though it was classified self-claimed as very secure, so it was one of the first misconceptions around it. So as a cybersecurity like researcher, it's pretty interesting. Yeah, and we're gonna see like what's gonna happen this year.
Great, thank you very much. If some of the things that he said doesn't make sense to you, that's okay. It doesn't make sense to you.
Not because of the accent.
Yeah, maybe that's it. All right. So to dive into the conversation, obviously, again, as a laywoman, I had to do some research, and it was very interesting to me to see how kind of distributed the opinions were about blockchain, its potential, and its future. So I wanted to compile a couple of slides, or just 2 slides, that on the one hand look at the opportunity, and the other hand would look at the hype side of things. So the first one was, and again, I just kind of randomly put some things together that I found quite impressive or quite interesting, is the size of the blockchain technology market, which was kind of projected 2016 to 2021, where you see obviously exponential growth from about 210 million market size in 2016 to about 2.3 billion in 2021. So this kind of just shows you, and I don't want to say that all the statistics coincided. So there is clear difference, and I'm sure Ahmed he can enlighten us about that. But this was just one of the exponential growth statistics that I found quite interesting to look at. The second aspect around opportunity was the idea of jobs, obviously, because it's a new technology. A lot of people are looking into blockchain as a career opportunity. And interestingly enough, apparently LinkedIn job postings around blockchain tripled over the last year, so 2017. So that was also an interesting aspect that I looked at. The third one, and that kind of comes back again to the question of entrepreneurs and business owners, the question of efficiency. So how would I incorporate that into a company that I work in or that I own? And apparently 57% of large corporations are currently actively considering or already in the process of deploying blockchain technology, which I found actually a very large number. Maybe we can comment on that in a little bit. So when I was looking at these statistics, I was like, oh wow, so this is really something that we have to take seriously and that will impact our community as it goes forward. But then you also find comments such as this one, that a survey of chief information officers from 56 hospitals in the US voted blockchain as the most overhyped technology in 2017. So I found that also quite interesting to hear about that, healthcare. And the other one, I'm going to read it to you, it's a bit longer, but I found it quite interesting. This was a comment by someone who wrote an article in the startup saying, if you're considering building a blockchain-based app or investing in a blockchain-based startup, first ask yourself, does the problem being solved require interactions or exchanges of financial value between mutually mistrusting entities? Mistrusting is meant both in the sense that you're unable to establish another entity's identity, and also that you don't trust that entity with your data. If not, then guess what? You don't need a blockchain. So I found that quite interesting, this question also of trust, which keeps coming up when it comes to blockchain. So just to kind of put us at the same level of knowledge, this is pretty much all the knowledge I have on the topic, so you're welcome to it. What I wanted to start off with, and probably you're going to run away from the panel if I do, but I'm going to risk it. Can you explain to us what blockchain is? See, I knew this was going to happen. Nobody wants to answer this question.
I can ask the first question maybe for the crowd. How many of you have bought cryptocurrencies? Just to have an idea randomly. That's not bad. Okay. So, may I give a shot?
Please, go ahead.
So, very general. I think a way to depict it is if you consider blockchain, you think about it as a decentralized accounting, right? So, very generally spoken. So why decentralized? Because there is no central authority, no lawyer, no trustee, no notary validates the transaction. But it's happening throughout computer networks who carry out this validation through programs. Accounting, because obviously the blockchain, the principle of the blockchain is related to basically sorry.
So you said it's related to accounting?
Yeah, no, I was just thinking of something else. No, fine. Sorry.
Sure.
No, the accounting background is basically because it's coded, so it cannot be verified, it cannot be changed, it cannot be muted, so it's an unmutable ledger. And the third aspect is that obviously it's based on cryptography, so it's nothing that you can actually change afterwards, and that can be forged, and it's public. So that's why thinking of it like the principle of a decentralized account is probably a good way to start the discussion.
Thank you. Any other comments?
Quick question. How many of you are software engineers in the room? So I would assume, like in most of cases, whenever you're using an application or software, you don't really look much at the actual back-end infrastructure of whatever you're using. Just use it for a specific purpose and that's it. So one of the interesting things is, like you mentioned, like your first question was blockchain, and there is a lot of confusion around it when it comes to people, because everyone wants to know what it is, like everyone is talking about it. But as a software engineer, like the way I look at it, it's mainly like a back-end, like technology, and if you're not, if you don't necessarily have to deal with like data management, data privacy, or identity management, because those are like problems solved or partially solved with blockchain or distributed ledger technology. But if you're not an engineer, like there is not that much interest, at least in my opinion, like for people, because it's going to end up being very confusing, and also we end up seeing companies like Kodak just adding like blockchain to the name, or like even random companies, and then the stock goes up because people are just looking at like investment opportunities around it, and that's one of the main reasons I would say like there is a lot of like buzz around it, especially with the cryptocurrencies. People tend to look more at the financial values of those like cryptocurrencies / securities / assets, depending on how you want to call it. And it's very confusing for a lot of people. So yeah, like I would say like the first question like people need to ask to themselves is, well, do I actually have to deal with data management? For instance, is blockchain something which is going to be like relevant now if you're doing like data management? When in Europe you have legislation like the GDPR, like for all the privacy being pushed since like the beginning of the year. So around it, all the information you have to manage and what you exchange with which parties or the suppliers or everything is one of the core like concept around it, because obviously like the way you deal or manage your clients' data in Europe is going to be different than Middle East. In Middle East there's not really like any regulation around it. Like we can see with the amount of spam we receive. But if you start storing data on a public ledger or like on a private ledger, you know, those are like basically going to the data management / identity management type of category. And then the first question is, so going back to the original question, when you got the answer, you should just have asked back like, well, do you have a data scientist in your company? Do you have an actual CTO who is going to like make sure of refreshing your portfolio of products for your clients? Because ultimately it's not like, okay, like the executives of the company are still going to have an input on those decisions, but at the end they still need to have like the internal resources to make that judgment. You know, like no offense to you, but you know, if someone go to you and it's like, hey Farida, what's up? I've heard about this new technology. Should I start using like a 64-bit operating system against a 32-bit operating system? Like, why?
I have 3 people to ask now, so that's great. Get their business cards. That's my recommendation. But thank you very much, Matt. I think that brings up, I mean, the question of should it be a question that we need to ask? You know, what is blockchain? Is that a question that is important for people to answer? And I think maybe Ahmed, can you enlighten us with with a knowledge about how this technology was developed and maybe why it was developed, so that we understand the why, coming back to Simon Sinek, of the whole background.
So I'll try to give sort of an analogy, a quick answer to what is blockchain. So who here uses Google Docs? Pretty much everyone. What happens in Google Docs? Anyone? You save something somewhere, you can add people, right? People get added, everyone types in everything, the data is all shared, everyone can see the data. Everyone can see who's typing what, who's putting what into Google Docs. The blockchain is kind of operating the same way. So I'm very overgeneralizing it, and correct me if I'm wrong, but in the sense of the shared data, where everyone can see what is happening, is very, very crucial in business practices and business processes. Why? Because if you were to have a supplier, you were to have a customer, they both have their own databases. The customer has their own database, the supplier has their own database. What if it's wrong? You have inefficiency and you have extra cost, because they go back and forth and say, wait, there was this, or we recorded this. And they'd say, no, we recorded that. And if they were to use a Google Doc and say, look, we put this data at this time and it was verified on the blockchain, you can't go back on me and say, this is the thing that you said before. So the whole point of it is the shared data, where when somebody puts in something, it's there forever. You might have a comment about that later, but the whole point of it is that this sort of incorruptible nature of it allows for this sort of one version of truth to be followed. So this Google Docs analogy for me always it makes sense, because everyone can see what's going on, who's doing what, and so it allows this one version of the truth. So to go back to the question about the history, it's very interesting, because blockchain apparently it's been in existence for the past 30, 40 years, and it's only come. So there was a series of stages. There was this guy called David Chaum in the 1980s, there was this big cryptographer. He had this idea of virtual currency, and he tried to do it, and it didn't succeed. And then in the 80s and 90s, with the development of the web, you had this group called the cypherpunks, and these guys were very libertarian. They wanted sort of private money, free money, something where they would literally operate in a world with no government and sort of no central power. And there was this mailing list where they would send each other all these cryptographic papers and all these different research that they would do individually. And then you had this guy called, I forgot his name, I think David Wade? I can't remember.
Nick Szabo?
No, not Nick Szabo, the other guy. So anyways, in 1997, this guy, Wade something, he published sort of a report about one of the fundamental things that Bitcoin uses. And then Nick Szabo comes in 1998 to 1999, talks about smart contracts. In 2005, he comes in and talks about using gold as a currency on a decentralized network. And then the financial crisis happened, and then in 2008, around November time, this random person called Satoshi Nakamoto. Who's heard of this person? Who knows him? Okay, that's I saw you. She might be. And again, the white paper came out as soon as straight after the financial crisis, depicting how a decentralized currency would work using blockchain technology, essentially. And what was interesting was Satoshi Nakamoto, whether it's a person, individual, was a group or alien, really used all the technologies or research papers that was formed by the cypherpunks, by David Chang all those many years ago, and kind of figured out, the dream of the 80s and 90s. So that's sort of a brief history of how it was started, and from 2009 it just blew up really.
So the first application of blockchain was the Bitcoin,
yeah.
The first known one.
Yeah.
So
how
Bitcoin is considered, as we will probably talk about later, as kind of an outdated use case for mass adoption.
I think that's very interesting, specifically because when we started putting up this event and people started writing to me saying, Farida, I've been to so many blockchain events and I still don't know what problem it solves. So what problem can it solve? And I think that's a very legitimate question. So maybe we can continue with that. So what problem can this technology solve for us?
It comes back to my original point. In your day-to-day job, you have to be like data management and identity management. Well, if yes, you will know the existing solution that are blockchain-based or not blockchain-based around that. If you're not, then blockchain is part of that ecosystem around that problematic. It just happened to be the most popular one because everyone is talking about it. Regarding what problem it's solving, usually with engineering, if you're an engineer, you often end up building a technology, but you don't really know immediately what problem it's going to solve. It's when the first marketplace started to happen with mobile, no one felt when they were building the Apple Store, no one was okay, some people are gonna write Uber, that's not how it happens. So it comes up to what people are willing to do type of thing. One of the main use case people are liking a lot, but which is getting a lot of attention is all the financial services use case, because you have a lot of intermediaries taking a lot of commissions. So the idea of cutting people out of the loop is one of the main use cases of the market. But from an engineering point of view, so what people need to understand, and we see it a lot with security, is that a lot of companies in the region or outside of the region are still using a lot of very outdated and legacy technologies for their business, like PHP, for instance. And now if you build any type of application, with what you have now, like microservices or like other cloud providers like Azure, AWS, or like all those guys. Those actually solving a lot of problematics for IT because, like we were saying, one of the main problems with emerging technologies is often companies don't have people in-house that are knowledgeable enough around those technologies. And last week during the Senate hearing, like the SEC chairman and the FTC chairman both admitted that within their capacity as like the most significant financial institution in the world, they're still lacking of technologists internally to answer all those questions, to see what's bad, what's not, and what people tend to forget. It's like an emerging technology. So, for instance, with Ethereum and Bitcoin, they're solving different problems. Smart contract application were not around. Not that widespread before, so it depends with which platform.
Maybe Hubertus, from an investor's perspective, right? When you were to evaluate, or when you evaluate blockchain-based technologies, how do you approach this question of what problem it solves? Because ultimately, that is, the success factor for any business. It has to solve someone's problem somewhere. So from a technology perspective, how do you think, how mature is this technology, and how can we, from a, let's say, non-tech industry perspective, look at this technology as a problem solver?
Well, I would actually consider the blockchain technology as the Internet of Values. It's basically similar to the Internet. What problem does the Internet solve? I mean, nobody's asking this question nowadays when you evaluate tech deals. It's just out there, and you look more at the problem that the use case is solving. Right? So for the blockchain, and I would say the two main points that it is resolving is, first of all, it reduces cost, or it's supposed to reduce cost, because you can remove layers of bureaucracy within your organization, and at the same time increase speed of transaction. Obviously, not all of the blockchains out there, especially the proof of work blockchains like Bitcoin, resolve that yet because they are not very scalable. This is something which is being worked on at the moment. But I think this is the two main points when a blockchain should come into play, right? And from an investor's point of view, honestly, I'm not so much looking at the fact of the question of the blockchain itself. I'm more looking at the business as such that I'm analyzing, right? So is this something where a blockchain is necessary or not? Comes a little bit into play what you mentioned before, right? Or can you just use a normal database? Because blockchain is something complex, right? So you don't want to just, for the purpose of having a blockchain, implement the blockchain, right? So it should be something where you really have a substantial upside, which refers to what we said before, is basically create a network effect, remove middlemen, remove trusted third parties, create some more widespread applications of what you're doing. But just for having it, because you can say you have a blockchain, this doesn't make sense. Very often, a simple database solution is way enough.
Interesting. So Ahmed, before I showed the statistic that 57% of large corporations are considering blockchain as a technology to adopt. Would you recommend this to a company to explore that? And if they do, how do you know where to start? If again you don't have the know-how in-house, obviously you would have to get either advisors or in-house know-how. But looking at the business that has been the same for maybe 30, 40 years, what would this do for a company to explore blockchain and technology?
So, in history, it teaches us one thing, that change is constant. And so every company, every family, every business, they should look at everything that could impact them, whether it's blockchain, AI. And so regarding the blockchain world, it would probably make sense to go to the startups, to those who are leaders in the field, and just talk to them about it. Say how can we use and adopt blockchain in our business? What do we need to know about it? What is important? But the advice that I usually give, especially when I have a lot of friends asking me, I tell them to research Bitcoin, because once you research Bitcoin and you understand, and you have that paradigm shift, you're like, oh, now I get it. Then you're like, okay, this is something that now I know what blockchain is all about, because Bitcoin is implementing blockchain technology in one aspect. Think of Bitcoin like a game, right? It has certain rules. Ethereum is another game which has its own different rules, and it's using blockchain in but it's still using the same technology as a way to solve different problems. And so just going at it from sort of just starting from the basics and then working way up will go a long way. And for a family business who probably wouldn't have the time to research all of this, and it would definitely go to a startup. Those who know the space, there are so many startups out there that would offer the expertise.
That's very interesting. I mean, in my research, I'm so proud of this research.
Very good.
I found this. Thank you, man. I found this chart that kind of maybe you will destroy or maybe you will confirm. But I found it quite useful because it outlined a little bit the practical application fields that this person who wrote this chart saw for blockchain at the moment. So you have smart contracts, digital currency, record keeping, and securities. So what I would like to know is how evolved are these fields right now? And if I said, let's say I have a company or I work in a business and I want to be more efficient and I want to be more effective, how advanced is the technology in these fields that I could say, you know what, this is going to be a great idea for me to switch my traditional softwares and my traditional systems to apply a blockchain-based solution?
Well, I would argue that the technology is in very early stages. So we are really talking about the very first layer of this Internet of Value. So if you compare it to the Internet of information, so the Internet that we know, you can actually, the Internet is actually a stack of software of 7 layers, right? The base layer is the Ethernet, right? So it's the most simple and least scalable technology out there, looking at it from the Internet point of view. And what we are talking about with blockchain today is exactly the same layer, right? So we are at the stage where we are experimenting with the technology. We are not having just the scalability to make it a broad adoption, but this is coming. So it's, I think the point is really here to understand, to embrace it, to study it, but sometimes it's not, it's good not to be a first mover, or the second or the last mover, or third mover, let's say, and not to jump on the first boat, right? In that context, let me add one other thing. I think I'm not sure if we made this distinction already before, because we're talking about blockchain, it's a very general term, but I think we need to distinguish between the public blockchain, which is actually the Bitcoins and Ethereums of this world, which is actually this decentralized libertarian kind of thing where you have this removal of the gatekeeper, of the middleman, etc. Then you have the private blockchain, which is probably more the use case that is relevant for you guys, which is maybe for governments, where you apply blockchain technology within the framework of a company, of a government, or of a bank or an organization. And the third layer is, the third aspect is cryptocurrencies, which is a completely different thing, but kind of interrelated, right? So I think it's important that we distinguish this terminology.
I think that's very helpful because also, again, you know, from a user's perspective or from a layman's perspective, you want to see it like you said, Matt, right? It's not necessarily that I know what the technology is, but ultimately is how is it going to affect me, my work, my company, or my life, basically, in the broader sense. So what would you say about the readiness of the technology nowadays, specifically maybe looking at the security aspect of things?
Sure. So, like Hubertus was saying, it's still like an early stage, so it has a lot of potential, but we don't know where it is yet. And we keep seeing like new platforms emerging. Just like with phones, you know, you have like the Nokia, Windows Phone, Android, iOS. So it's kind of like something similar happening. We still don't know which one is going to be like the leading platform. The thing is, it depends on like the actual like the technical debt you have within your company. So for instance, if you're like a bank like JP Morgan, so internally you have a lot of like engineers who are like specialized in a bunch of technology. So they started like this blockchain like units internally, and they looked at what was available out there. So to go back to the distinction between like private and public blockchain. So Ethereum was pretty popular, and what they did is like, okay, like it's interesting, but there is a lot of question marks, and products that are around it that are not very compliant with our type of business. So then after that, they started to add like a privacy layer to make sure that not everything was public and everything. Now most recently is doing a partnership with the Zcash Foundation, which is also like working on that privacy layer because you don't necessarily want everything to be public. But the thing we see now is with Hubertus technology and with any type of emerging technology, as they emerge, you start to see the problematic around it. Like the first like misleading pitch around blockchain was the fact it was secure. So it's immutable, which doesn't mean secure, but the fact it's immutable also introduces a lot of like issues because you cannot modify the data. So like if you take like cases of social media, so people are doing like blockchain-based social media, what it means like there's no such thing as censorship. And we know for some people, it's kind of important, like censorship. Same thing with Hubertus problematic is like they just keep arriving at the same time you work on them, but like big companies like researchers trying things out, looking what's available, what's becoming like obsolete or not. So if you're like a smaller family business, it's very difficult to achieve.
Yeah. So it's really kind of a lab stage at the moment. Would that be correct to say? So if I use the word blockchain, is there any alternative to that from a distributed ledger perspective? So is there other technologies that do the same thing, but that we know less about?
So, so you just said a very interesting term, distributed ledger. So in 2017, actually, this term distributed ledger technology, sorry, 2016, DLT. This was sort of a very, it was a commonplace word for the banks, for the corporations, because they said, oh, okay, we know blockchain, but we don't really want to use the blockchain because essentially a blockchain would work if it's public. And this is why you have this public-private debate, and we don't want to get into that. But then they thought, okay, let's sort of think blockchain is good because of this Google Docs element. It allows us to understand who's doing what at this certain time. They said, okay, there's something called distributed ledger technology, which sits, let's say, that's the umbrella term. And so what you have is, you have this big corporation, also the biggest blockchain startup, it's called R3. They're a consortium. So what they do is they get a lot of banks together to work on a particular problem. And so what they say is all the technology that they've done is blockchain inspired, but they don't use blockchain. They use sort of DLT technology. And so if you think about it, every blockchain is a DLT, but not every DLT is a blockchain. And so this is one aspect. Another is something called DAX, directed cyclical graph. I don't want to get into that. I still don't understand it myself.
I'm scared of people here.
Yeah, no, I don't want to get into that because if blockchain is nascent, this is very nascent. But the thing is, at least with blockchain, it gives us sort of a foundation approach. I mean, it doesn't have to be something that we will use in the next 50 years, but it's given businesses a different way to think, because we now live in a world where there's so much data is being produced, and not many people could use that data or structure it in the right way. And so if that data was shared and not replicated, it would allow for it would increase efficiency. And to just answer one of your questions actually, who works in securities? One, two. Okay, who works in record keeping? I just want to get the gauge. Okay, I'll talk about sort of the equity market. So in the equity market, it's very interesting because in Goldman Sachs, they did a research paper that said if we were to use blockchain for the equity market in the US, they would save, the industry would save $5 to $6 billion a year. The reason being is because once you buy a security from your broker, like an Apple share, it goes through a whole load of people, and then two or 3 days after, it would be settled, right? But when you use a blockchain, once you buy it, the clearing and settlement takes place automatically. So in March, actually, the Australian Stock Exchange, they are actually implementing blockchain technology. They're doing a rollout in March this year. So they're the first stock exchange in the world to actually use blockchain, and this will be, I think this is a watershed moment, because then it's like proving whether it will work or not. So I definitely say in the security sense, at least Australian stock exchange, they're
even the Nasdaq is a pilot project in that sense. So for the pre-IPO share trading, they have also blockchain rollout in a beta phase. You see, everybody's trying to work it out.
Everyone's trying to, exactly.
I think this is very interesting because also it shows that, as you say, there's like little labs everywhere, and everybody's trying to apply the technology to their own specific field, and which obviously makes it so difficult, I guess, to kind of give an overview over the technology, because it kind of happens, its development happens in a decentralized manner. But if we already talk about the equities market, which is a very interesting topic, we're not going to get into it. What I find very interesting is to talk about cryptocurrency more from a technological perspective. So if we look at, we take everything you've told us and we say that the technology itself is still kind of in a very early stage, and it's not something that we've seen the full development of yet, or its full application. What does that mean for people who invest in cryptocurrencies at this point? How secure, other than being, if you're someone who likes to play around, then that's one thing. But if you're someone who looks to invest in it long term, what does this mean? And how big can the shocks be with regards to development that will still come from this technology? And how could it impact the cryptocurrency market?
Well, I mean, that really comes down also to the question, what do you define as money? So money can be a store of value, it can be a means of exchange, and it can also be a means of accounting. So I think there are different kind of approaches to go into cryptocurrencies. There are people who say, okay, I just want to have a safe bet, especially the millennial crowd. They are investing more in digital gold, which is Bitcoin, than in real gold. With an article recently, I think more than 50% of the millennials invest more in crypto than in other asset classes, which is kind of scary and interesting at the same time, I would say. So I think from the cryptocurrency point of view, it's really what you see today is a little bit like Las Vegas. So people are betting a lot, so it's not really based on fundamental analysis. That's why you see also these big volatilities, and it's not very sophisticated. So my recommendation is always, when you want to get into this business in a serious way as an investor, not as an active or passive investor, try to reach out to some funds who understand to do their homework. It was actually the only reason why we got shareholders in this cryptocurrency hedge fund, because we went exactly, we were sitting in the same boat like you guys probably sit in this sense. And we want to get an exposure in that, but I don't have the time and the diligence and the team around me to analyze all of these white papers coming out with all these different cryptocurrencies. So where should I invest in? So I invested in a team that does that for us, and they are pretty good in that. So I think this is a way how basically the application from the traditional asset markets gets applied to crypto as well. But when you ask me what work we do when we analyze these kind of currencies, we really look at it like a normal venture capital case. So we try to understand, okay, what is the use case, what is the team, what is the technology, what is the problem they are solving? Is this more of the same, or is it, for instance, like we see now, one of our recent investments, it's a company that creates the interoperability of blockchains, so there's nothing out there yet, so the different blockchains can talk to each other, which ultimately will be necessary, because otherwise you will be silos, which are isolated. So I think this is the way how you should approach it. When you are a sophisticated investor, when you are more on the passive side, you can choose if you want to gamble, which is fun, but I wouldn't risk all your, I would just risk your pocket money probably for it, or you go to a sophisticated place to manage this for you.
Any comments, Ahmed, from a researcher?
So usually what everyone says in this industry is, if you really want to invest, put in what you're willing to lose. So if you've got $1,000 you don't really care about, and you really want to get into crypto, then maybe research and spend that $1,000. So that's what my dad did, to be honest. He's like, I don't care about this $1,000, just put it into Bitcoin. That's like, okay. He's up, so he's happy. But for me, so if if we're to look at least the sort of the value of why it's gone up so much, I think it goes down to sort of like, for me, sort of three aspects. So the first is speculation, like that 100%. People like to speculate. I was in China for 2 years, I was in Korea last month, and it's just crazy. When I was in China, I saw, there was this ICO event, and I've never seen so many aunties in my life, like gathered in one place, except like weddings back home. But they were actually investing into things that they didn't understand, which is why the ban happened in China. Well, one of the reasons why the ban happened in China. So the speculation is one. The second thing is, it goes back to the concept of money. So the dirhams that we hold in our bank accounts and our wallets, what are they backed by? Can anyone answer me that? Sorry? Gold, no.
It used to be.
Wait, no, go on. Okay, what central bank? So what does the central bank have? The government's guarantee. So what are they guaranteeing?
It's going to be fixed.
So basically, what it's backed by is the government's capability of of maintaining the economy and pushing it forward. So that means that we are, if we use a dollar, we're essentially believing in Trump, right? And his administration, which is practically what the US dollar is. What cryptocurrencies give, and at least Bitcoin gives, is the fact that for the first time ever, people are allowed to actually hold something that could be worth value. People value it, people attach value to it. Like if you're in a desert, if there was this bottle of water and there was a pile of gold, no one cared about a pile of gold, they just cared about this bottle of water. And so and we've seen examples of this, where in Cyprus, where in 2013, when the sovereign debt crisis happened, and I think 25% of people's deposits were frozen and they were actually given to the government because of the bailout. Bitcoin price went up by $30 or $40 just because of that event. In India, the demonetization happened as well. So Bitcoin price in India was trading at, I think, 200% premium or something like that. It was very crazy. And so for me, I'm just thinking, what if we get into another recession, which we definitely will? Like if somebody says there's going to be no recession, they're lying. It's going to be so interesting to see what's going to happen when the world's going to be in a recession with a world full of cryptocurrencies. Will Bitcoin go up? Will it go down? So there's that second concept of money. Because it cannot be changed, Bitcoin can be forked, or people could do a different coin, but if people are still focused on Bitcoin, if people are still focusing on Bitcoin, then thank you. Yeah, if people are still focusing on Bitcoin, then people attach value to it, and so it will keep on going. And I'm not saying Bitcoin will keep on rising. I'm not like a financial advisor, but the genie's out of the bottle, essentially. If Bitcoin is there and it goes away in 50 years like Nokia did, something will replace it, something better will replace it. And the third thing really is a concept of, for me, is digital economies. So Bitcoin itself is a digital economy. Ethereum itself is its own digital economy with its own sets of rules and parameters. But I think of it as the Sims game. So people can really create their own virtual worlds. But these virtual worlds, in these different blockchains, I'm talking about public blockchains, by the way, in these different blockchains, because every public blockchain essentially will have a digital currency. That's why there are miners, that's why there are incentives, that's why the public blockchain moves on, because people get rewarded for doing something and they get a currency reward. And so for the first time ever, essentially, a geek in his home, he could create his own digital economy, and if people like that economy, the value of that currency will go up. And nobody's ever had that power except the government.
So, thank you very much for that explanation. I think in general, the challenge is that it's kind of it's a mind game almost, specifically for people who are not technology experts, to kind of try and extrapolate what the real impact of the real life impact will be of this technology. And specifically, I think the interesting thing about cryptocurrency is that it's something that we see. We see the application, we see the volatility, we see how people are successful, not successful. So if we go back to the general term of general topic of blockchain, what also interested me a lot was the question of the maturing of the technology. So, looking at being, again, I take the example of, let's say, you're a business owner, you have a steel business in Alexandria. This is a very specific example, doesn't matter. But in what amount of time, let's say if I don't want to be a first mover, in what amount of time should I look at this technology to start impacting me, whether be it from the public side, and when should I start considering, the kind of private or the solution-based technologies that could arise and make my life easier with regards to cutting out middle people and all these things? Any thoughts on that?
Well, there is no way to predict what's going to happen in the future, right? Like if you have a startup, you start working on a project, you have a deadline, and you end up releasing it like 1 year later. Because we cannot really forecast that long. But what's interesting is now we see like a new wave of educated users where, because everyone talks about it, everyone wants to do it, or everyone wants to know about it. So people are becoming more and more curious about technology, which is interesting from that aspect because people are thinking more into application of like that technology. So when you're gonna apply it, usually if you're interested in like following news now and like seeing like the different applications for it, whenever it's gonna be mature enough, like you would know because you have been like following a specific technology from a certain point of time. That's basically like the only thing I have to say. Just like keep watching, regardless if it's like blockchain or AI. Like same thing with AI. So like people were like overselling it. You have like those like dumb and smart AI type of things, and that in some cases it's only like stats. It's still like important. Automation is going to be important. But just like if you're like, in which case it's going to use automation? It's like why it depends, right? Or like is AI mature yet? It's like it's not really what works. You have to rewrite your algorithms. Same thing with blockchain, which or like distributed ledger technologies. Which category are you part of? Are you gonna like? Are you thinking of building your own platform from scratch, like we see with some banks in the US or like some stock exchange, because they have like the actual like, software engineers to do that? Or are you like a late player who's gonna wait for like a platform to be mature and to stick yourself on top of it, like we see with smart contracts, for instance? It depends on which category you're playing.
No, my person, it's fine. Any thoughts, again, from a timeline perspective? What would you consider interesting from an investment perspective, maybe, to look at blockchain with regards to the next 10 years? When is it interesting?
10 years in blockchain.
Okay, 18 months? Better?
2 years is good.
Okay, 2 years. Let's look 2 years. How do you observe the technological development? Maybe also a very simple question, where do you observe this development and how do you know who the movers are and where the first movers are and you can observe their progress?
But the good thing about all these is you can do a lot of research yourself. So this is one of the few, I think, spaces out there where you don't need to go to university to learn about it. You actually can do your own homework on the internet and everybody can become an expert in this field within a reasonable amount of time and have sufficient knowledge in order to, at least for his own application, to understand whether it's relevant or not. So if you ask me what are the trends in this whole space in the midterm, right? I mean, I would say that one of the trends is that it's getting more mainstream, definitely. So I'm pretty sure that we will see more of custodians coming up that help you to hold cryptocurrencies as a financial asset instead of a bearer asset nowadays, because you have all these security issues with your wallets and all these kind of things. So this will disappear. So this is a very interesting industry by itself, which kicks into regulation. So I think what we will see as well is also a trend that I'm observing is more and more regulated spaces. So we've seen this now in Korea, China. China basically has banned it completely. They even have tried to block the internet access. Korea wants to regulate it. India wants to regulate it as well. The US, I think, they have a very interesting approach. The SEC and the Chicago Future Trades Commission recently in a hearing, they were very positive about it. I mean, there was the governors of the SEC and of the CT, whatever, CFTC, they were even saying we need to accept that because the millennial population wants that, so we cannot just say we don't, we're bearing it. We have to understand if they want to be governed by that, we need to embrace it. So I think this is also very interesting to observe what happens with regulation, and this will actually shape all the other trends because regulation and technology define what's the other use cases that will come up. So I think we will see more and more blockchains that are faster, that are more scalable, that allow the interoperability between each other. And once this happens, I think then we have more mass adoption. I think another very interesting use case is already happening now. I'm not sure if you're familiar with Telegram, which is this messaging app similar to WhatsApp. They are now launching a very large fundraiser, ICO, initial coin offering. And this is one of the first times that an established company with millions or hundreds of millions of users is actually trying to leverage on their existing user base with blockchain technology. And I think the same thing will happen with Facebook. The same thing will happen with WhatsApp sooner or later. And these are, I think, very interesting use cases, and this will help them in mass adoption. Right? So this is, in a very nutshell, this is such a broad topic, we can discuss that all night, but just in a nutshell, where I see the biggest trends coming.
Ahmed, I know that you teach around blockchain and you try to explain it to people who maybe are not familiar with the topic so much. If you had a room full of executives in front of you and they would ask you, what is my next step? What should I do? Whether I have a skilled IT team or not, that's beside the point. But as executives, as people who look at my industry that is not related to technology,
So again, this goes back to the same question that we explored in the beginning, because the essence is blockchain a technology looking for a problem? Is it a solution looking for a problem? Every executive has to look into their own business and the industry to see what problems are there, what do I need to, or how can I solve it? Will a blockchain help or not? There's actually this very interesting infographic where it's like a decision-making tree, where it's like it says, "Do you have a problem?" Yes, and then there's, I can't remember, but there's many different questions, and if you keep saying yes to all these questions, then essentially you'll reach to blockchain, and it will actually say public or private. And then from there, let's say you would need a blockchain, then you would go out and see who are the people who could implement this sort of thing technically. Because within blockchain, again, so with Ethereum, if we were to take Ethereum as an example, I don't know if we've explained it, we've mentioned, who's heard of Ethereum here? Okay, good. Does everyone understand what it kind of does? Okay, correct me if I'm wrong again, guys. Ethereum essentially is, you could think of it like an app store, okay? And essentially it's trying to create the biggest app store where people could come in and create their own apps. But these apps would essentially run on their own and cannot be shut down by a press of a button. So this is huge. The reason why is because if right now I create an application on top of Ethereum, and people use the smart contract functionality and they pay to use it, it will keep on running. That's awesome because I don't have to sort of maintain this contract anymore. Once I put it there, khalas. So I actually asked Vitalik, so he was the founder of Ethereum, the creator, 22-year-old genius, however old he was. I actually told him, so if the community created an app that would have a negative effect on society, what would happen? He said, if the community wants that to happen, then it will happen. And I was like, fine. But like it's crazy because essentially is anyone can really create anything they want, and that application cannot be stopped. So again, correct me if I'm wrong, but that's the idea that I've gathered. And so what they're trying to do is they're trying to create this app store of decentralized, or anyone can create decentralized applications on top of. And then so the executive, to go back, I'm sorry, I went off a huge tangent, he would need to think whether he would want to create another Ethereum or build on top of Ethereum, or create a totally private network as well. So it's these sorts of things, and if you want to create your own Ethereum, that's so hard. But to create an application is a bit easier. To create a private is also a bit easier as well. So there are multiple yes and no's before
you come to a conclusion.
Yeah,
sure.
go on.
Sure.
I think the two most, to be more practical, right, for you guys, the two critical issues I would look at when I'm a business owner of an enterprise. We talked about the steel industry or healthcare, whatever. It's actually twofold. One thing is the business process optimization. So I look at my supply chain and see, okay, is there a way that I can streamline this, make it more efficient? And if yes, how can the blockchain help me with that, right? Removing layers, cutting costs, being more faster, more, let's say, scalable in my processes. And the other question, which I think is relevant to everybody here, more or less working in assets with fixed assets, is another trend that we are seeing as well in blockchain technology and crypto in general, is the securitization of assets. So we are seeing a lot of asset-backed securities coming up, which we define as the ICO. So substantially what you could do, just take the example of the steel manufacturer, he could actually tokenize his plants, right? His steel manufacturing company, and raise funds instead of doing, I don't know, an IPO or going to the bank for asking for a loan. He could try to tokenize that. Probably for a steel use case, not so ideal, but if you're having, it's an energy company or a power plant, this is very interesting because you can tokenize that, and you have a lot of network effect which you can create with your end users. And I think this securitization of fixed assets, this is something which we will see a lot in the next 1 or 2 years. And this is probably something very relevant for every business owner. And I know from sources that especially in the Middle East, the governments are looking at creating a jurisdiction around that in order to have a legal framework for it.
Thank you very much. Before we close, I'd obviously like to give you an opportunity to ask some questions. So I'd like to open the floor. Any questions for our experts? Yes. Go ahead.
It's a question on digital currencies and cryptocurrencies, I guess. Now, from a libertarian perspective, it's obviously extremely interesting and it could change how we see money. But how would you counteract the argument that this is a dark pool, it is quite dangerous, and that it opens up the door to money launderers and criminals because of its enormous nature, and central banks will eventually shut it down because it's not controllable? How would you counteract that argument?
I could go for that. So cryptocurrencies can either be anonymous, pseudonymous, or completely anonymous. So pseudonymous means, so Bitcoin is where it's pseudonymous. So essentially, everyone could see these transactions happening, but there's no name attached. There's an address attached. And what that basically means is any data scientist could go and actually run so much analysis on how these Bitcoins, where they were, and they could track each and every single sort of, basically its path. And so right now it's becoming harder and harder to actually use Bitcoin for money laundering, because if you use an address that was used and people know that this address was used for money laundering, nobody would accept Bitcoins from that address. So the FBI have already cracked this. They've already, was it 2013 I think, they shut down the Silk Road when they used Bitcoin for illegal, they used it for drugs. Many people are doing so much data analytics on it, and so even if you're compliant, you don't even need to be a central bank. The fact that you can actually see an audit trail of where these Bitcoins or cryptocurrencies went goes a long way, because compliance officers with the central bank never actually had that. They've never had it with cash, and they'll never have it with cash. But with cryptocurrency, it's actually, I remember seeing a very interesting chart. So one of the biggest hacks on a Bitcoin exchange was in 2014, right, Mt. Gox. And they basically saw, okay, once these Bitcoins got hacked, where did they go next? It was such an interesting graph. So there was 850,000 Bitcoins, like in a huge block, and then each of them, data scientists, they literally went and said, where did each of them go? Some of them went to a Russian exchange, some of them went to private addresses they could never track, but they could actually track the majority of them and see where did these Bitcoins go. And so having that sort of data is actually beneficial for the central bank. They might create their own cryptocurrency, which they are, at least the Central Bank of China, they've been doing it since 2016, actually researching into it. And so for them, if they could track every single penny, they love it. Yeah.
Correct.
Any more questions? Yes, please.
I'm Zach. I wrote this book down. Well, I mean, this is probably a softball, but I'm still curious to know it. What kind of effect can we expect when central banks begin launching their own form of currency?
Can you repeat it, please?
What kind of effect can we expect when central banks launch their own currencies? Yeah, because I mean, from what I understand now is that, you know, if maybe in the next, I don't know, I'm just going to throw a number out, 10, 20, 30 years, there's going to be every country's government, central banks, going to have their own currency. So it's more currencies than talking about currency. So I'm just curious.
Is there Tinker?
What do you want to know?
Well, the first thing is that it depends if it's going to be public or not, right? Like you just mentioned, like if all the transactions are public, you're going to have like nation state like China, we're going to be like really enthusiastic about it. And you know, like the fact you can follow transactions, you know, it's not necessarily like going to help. But if you're like a central bank and if you're issuing your own coins, then for like AML or KYC cases, you can assume at least that in those cases they would know to who they're issuing coins. Whereas like, no, it's not coming from a central authority, so that's one of the main difference. So I would say like the main difference, if it's a central authority, like a central bank, it would like at least solve some of the KYC or AML issues, because you know, you can follow transactions. You have like startups like CipherTrace, you know, for Bitcoin transactions. But if coins are like you know, like private or like semi-private, you cannot follow those transactions. Whereas like if you have a central authority, what may happen is that if you do a payment, if you go like to buy a Starbucks coffee, you know, with your like a central bank issued cryptocurrency, well, you would not necessarily have access to all your transactions in your account. So you will not have access to how much are you paying for your rent, how much are you getting paid, all those information, because from a privacy standpoint, that's insane. Whereas like, if it's issued by a central authority, what they would have like the actual like encryption certificate, so in theory, they would be like the only one with the bank having access to those transactions, and not third parties like your car reseller, like your coffee shop. So I would say that would be like the main difference. And from that aspect, from a regulation point of view, and you can ask Aida, she's an attorney, it's a pretty big game changer, at least in the West or in North America.
From an investor point of view, looking at what's happening to the crypto coins right now, is this short-term, mid-term, or long-term investment?
You mean if you go into crypto now?
No.
Honestly, I would look at crypto in general long-term, because when we've invested in this space, we were really for the long haul. We are not day traders, because the technology is so interesting. And apart from the technological evolution which we are going to see, there is also a mathematical issue. I mean, there are only so many bitcoins, right? I mean, I think 75% of the bitcoins have been already mined and given out, so it's a natural scarcity out there. So I think from the investment point of view, if you look at it from a 2-3 years perspective, it's very interesting, and I would definitely consider it. If you're into it for short-term trading with all this volatility, I mean, it takes a lot of nerves and a lot of time to take care of that. I personally am not interested in these kind of things, but there are people who are very good in that. But it depends on really on the appetite. But in general, crypto I would see as a long-term investment.
Hey, thanks guys, very informative. I have 2 questions, one for Matt for security, and one for whoever wants to answer. So I'll start with the second one. For cryptocurrency to be adopted on, let's say, a global scale or by central banks on a regulated scale, don't you think that the value of the cryptocurrency should be a little bit more stable, or much more stable than it currently is now, for it to be a viable form of currency? So that's one question. And the second question, security-wise, with issues of privacy, you said that, let's say, the central issuer or the central bank will be the only entity that kind of has all the keys to what you use. Is that data actually in safe hands with some governments out there, or is it very easily hackable by other government entities or other malicious organizations?
So for the security one, well, no data is safe and no piece of software is immune to vulnerabilities. So by definition, it doesn't matter. Now you see cases like for instance, every time you centralize stuff, like crypto exchanges, they get hacked. If you're a central bank, well, so far we haven't heard of most of central banks, at least in Europe, are using the Swift network. We have heard of some central banks, like Central Bank of Bangladesh, being hacked by North Korea. So almost $1 billion got stolen, but because of some typo when they were doing the transfer, they only managed to get up to 150 or a million or something like that. So central banks being hacked because of the internal technical debt. They were using really old routers, the IT infrastructure was a disaster. You can assume stuff's going to happen. But if you're Switzerland or the US government, your access to resources is very different. But even then, you can still see issues because you don't control all of it. And like I was saying, most of software have vulnerabilities anyway. Just a matter of time until people discover it. We see it with the iPhone. An exploit, a vulnerability for an iPhone is traded at $2 million. So, a few years ago, the cost was lower, and Apple is investing a lot in security for that. Same thing with companies like Microsoft. They spend more than $1 billion a year just to invest in security. So, our central bank's going to do the same things that are building their own technology from scratch. Well, we hope so, because in this case, you're actually handling money. And we have seen it with crypto exchanges. It's easier to steal money because it's virtual, and then whenever there's some ambiguity about tracking money and everything, that's it, It's much easier than having to bribe casinos in the Philippines to take a few $1 million out and then go back to Macau.
So the cybersecurity business is a good one to invest in. And the crypto vulnerabilities and stability.
So yeah, I would actually, regarding the crypto stability, I would say at least the efficiency would be huge, because what you would have is, let's say we live in a world where we have no cash, it's a cashless society, and we just basically take our phones and scan. That would be huge for the economy of the society, because everything is digital, everything's frictionless, and it's faster. And I've kind of lived through that. So when I was in China, a beggar comes up to me, he gives me his QR code, and he doesn't want cash. He's like, scan this and send me money, right? So and to answer the question, the central bank's crypto would probably be very stable. It would be the same thing as the paper money in our pockets, because they control it, they own it, they could maybe press a button and then a new million coins will change. The only thing that changes is it will just be digital, and that's it. That's just my opinion. I don't know about what you.
The funny thing is, when you look around, you know, which governments have adopted crypto currencies, basically their own state currencies in crypto form. It's Russia, China, and Venezuela. I leave the rest up to you.
I think that kind of opens up a whole new session. So version 2 of this talk will be around this topic. We have time for one more urgent question. If not, I think I'd like to thank our 3 experts and speakers. Thank you very much for being here with us. I've learned a lot. I thought I was good after my couple of hours of research, but I think I learned a lot, and I do believe kind of what I'm taking away from this conversation is that really for people who are not directly in the tech business, that we have to keep an eye out, that we have to speak to experts, that we need to understand, to look at the first movers, understand what happens there, and then kind of slowly understand what this would mean for our own businesses and companies that are not directly related to the industry. From an investment perspective, I think there's a lot of very interesting things that are happening. But again, I like your advice of saying, associate with the people who do the research, who know what they're talking about, and clearly cybersecurity is the way to go. There you go. Thank you very much for being here. I really appreciate it, and we hope to see you at our next talks. Let us know at the back. Share your suggestions for topics that you'd like to discuss, that you'd like to bring up next time. We'll try to find as interesting speakers as we've had tonight. Thank you very much.